Hello everyone, I welcome you all to another exciting and learning session by the Powerhouse Ideas. I know I have been off the YouTube channel for last 3 weeks, and if you are a newcomer on my channel, I request all of you who is watching this channel for the very first time that kindly watch this video till the end because I will be sharing a lot of useful content. I have not been making videos from the last 3 weeks because I was a lot busy. In the previous month, I was busy with my income tax returns. Then I was giving some kind of paper, some kind of exam, which I have passed with good numbers. And now I thought that I should continue the series of my Nifty analysis with you. So we will be analyzing Nifty 50 in detail, explaining you everything you need to know about this chart and see that how Nifty can perform. So I'll be discussing about everything. Kindly stay with me till the end. The video can be a bit longer, but yes, it will be very much interesting and fruitful for you. Now let us discuss this chart on every time frame and see what exactly is happening on these charts and what we can expect Nifty to do in the coming weeks, coming months, or even on Tuesday. So I'll be discussing the long-term view as well as the intraday view for Tuesday, that is 16th of August. You can see the chart in front of you is a monthly chart. On the monthly chart, you can see one thing very interesting. If you are able to locate that this white area over here, which I have already highlighted, this area was working as a support earlier. You can see, a resistance earlier. Now exactly from this area, market has taken a bounce. What I wanted to show you on the monthly chart is this candle. Why this candle, this green candle is important? From the month of, from where we started falling, we did not had such big candle, whether it was red, whether it was green. No such candle happened to be this big jitni badi ye candle thi. It's a kind of a Marubozu candle. The market jahan tak gayi, market ne wahan pe close liya. There was no wick to the upside. So it's a strong bullish candle on a monthly chart. Forming this on a resistance, previous resistance, is also a stronger sign, and we are also getting a continuation. Still, we are sitting in the mid of the month. We cannot say that this is a continuation right now till the time we don't see a candle close. But yes, on monthly chart, this is the biggest candle till now. Somewhat similar candle was seen somewhere over here when we gave this breakout after the corona fall. Similar kind of candle is being formed. One candle was this big, then this was the second biggest, and now we have a third big candle. So no doubt on positional basis, the market is very much bullish. The whole month of July has been very bullish. The market has been rising to the one side, and that's very good for the investors as well as the traders who do swing trading. So now let us move to the weekly time frame and see what exactly market is doing and what can we expect market to do. You can see I have drawn a channel, an expanding channel, which is somewhat like this. Let me select a pen first. You can see that market was forming a channel somewhat like this. Every time when market touched the trend line on the upside, we either saw a rejection candle, a red candle followed by the green candle, or an indecision candle. There are two scenarios which the market is following. You can see market will always repeat its history. Agar market ne yahan se niche girna hai to. When the market approached this area, we saw a red candle after the green candle. Over here also we saw a red candle after the green candle. Over here we saw a doji candle. We are now in the same area. We have got a green candle. So this kind of scenario is not right now available. Can we see this kind of scenario? This you need to keep in mind. There are chances that the market forms a doji candle over here or a red candle over here. So this is an important area. I'll discuss more about this area on daily chart. But yes, the trend which market was forming, the market was forming a trend somewhat like this. It can be repeated. It cannot be repeated. Let us analyze that what we expect the market to do. Now let us move to the daily time frame and I'll show you something very interesting over here. Now when the previous two times market touched at this place, immediately touched this area, it started falling. You can see it over here also. Immediately it made a green candle, it started falling. But this time the market has first made a red candle. Over here we saw a green and a red. Over here we saw a green and a red. But over here we saw a red and a green. Means the bears tried to take the control, but the bulls are still stronger at this level. It was not the case over here. But over here, the bulls are still stronger. You can see by the candle formation. That's very clear. Now, before we analyze this chart further, we also need to look at the option chain. And why I'm looking at the option chain, I'll tell you very quickly. Let me change the color of the pen. You can see that the strongest resistance over here. All of you might be knowing that the call side is the resistance side and the put side is the support side. We can see that the level of 17,800 has the highest open interest. And on the support side, we can see the strongest support somewhere around over here. If we see the strongest one, nearest strongest, that is 17,500. So the supports are bit weaker right now and the resistance is bit stronger right now. So this also tells us a scenario that we are standing in an area from where the market started falling. And this data is also telling us the same thing, that the people are considering that the market might fall, right? But we should not be biased that the market has rallied a lot and it will start falling. We will make a plan of how to trade. Now let us move back to the chart and see. We have already seen that the level of 17,800 is very important. Let me place that level on the chart. This is somewhere around 17,800. Let me change the color so that you can see it very clearly. So this white line over here is the level of 17,800. You will be amazed to see that this level is also an important level on the chart. You can see it over here. It saw a rejection at this point, then a rejection at this point, then a rejection and a support at this point, then a rejection and a support at this point, and over here also this level is important. So as per price action as well, 17,800 is very important, and as per Nifty option chain data analysis as well, 17,800 is a strong resistance. So we need to keep this level into mind while we do the analysis. Let us dig deeper. Now let us move to the hourly time frame and discuss this chart in much detail and see what can happen on Tuesday. For the intraday players, let us see that what can happen on Tuesday. I'm removing this long-term trend line. You can see very clearly over here something very important. There was some kind of wick rejections at the bottom. Whenever a candle forms a wick on the downside, this wick denotes the presence of bulls. So bulls were somewhere present to take the market every time on the upside as soon as the bears tried to push the market down. One thing more important on the charts which I want to tell you, you need to understand the market psychology as well. Market has been rallying from approximately, let me show you the levels, from 15,183. You can see the low on the chart. From 15,183, market has been running without any significant retracement, and over this area there is no significant retracement. Two retracements were seen over here, but in this entire area we cannot see one significant retracement. Always remember guys, whether it's Nifty, whether it's any stock, no index, no stock goes up or goes down without a pullback. So 100% a pullback is due. But does that mean that the market will get bearish? Answer is no. It means that right now taking any position into the market is very risky. And most importantly, taking a CE into this market is very, very risky. Market is very bullish, but we have to understand that the market has not taken any retracement, and taking a CE over here on intraday as well can be very risky, because we are at a major level 17,800 as per option chain, as per data which is available on the chart. So as per both the data, the option chain and the price action, the chart is showing that 17,800 is a strong resistance zone. So what is to be done? Whether we should sit directly into a put or we should avoid a CE? Let me answer this question, that what can we do on Monday? Okay, abhi tak we have understood the chart very clearly. This is the chart in front of you. Let me zoom it out and explain you in detail. This level, we have understood that this level is 17,800 ka level, which is an important level as per option chain, as per the chart. Now what if market opens flat? If market opens flat and crosses above this and this high, you can see twice market got rejection from over here. So if market crosses above 17,724, let us say 17,730, and closes on 5 minutes or 15 minutes, we can take only single lot CE, because CE is risky, but breaking above the high can trigger it up to 17,800. This will be the scenario in case of a flat opening. Now what if market opens flat somewhere over here and gets rejection from the 17,724 ka level? We see a red candle over here on 5 minutes or 15 minutes. I am clearly saying that we are in an uptrend, but we can test a PE with a small stop loss immediately above 17,724, maybe a stop loss of 17,735. 5 to 10 points in index chart, we can keep a stop loss and can test a PE. If market opens flat and gives a red candle, or it will be very good if it can give a double top kind of formation on 5 minutes chart, right? This we are considering seeing the daily chart, that the daily chart is right now very much on the one side run up side. There is no significant retracement. Now what if market opens gap up somewhere above this level? We know that we are near a very important level. I will be avoiding a CE very clearly, because market on daily chart has rallied in one direction without retracement, and that makes the market very risky. Till the time market does not goes above 17,800, I am not taking any kind of CEs, and preferably not in gap up situation, because right now seeing SGX, we can see that we can have a gap up opening, but will I be taking a CE over here? The answer is no. Till the time market does not goes above 17,800, I am not taking any kind of CE. Now what if market opens nearest to the level of 17,800, and if market gets a rejection on 15 minutes, I'll be keeping a stop loss immediately above 17,800, maybe somewhere around 820, and take a PE. What if market opens gap up above 17,800, which can be a possible scenario? Immediately, I won't be sitting into a CE, because on the daily chart, if you remember, we are in a straight away uptrend without significant retracement. So I will wait for the market to at least confirm a double bottom on 5 minutes, on 15 minutes, stay above this area, then only I'll be looking for a CE where market opens gap up above 17,800, stays above it, forming a double bottom, and breaking above the previous high. This is the only scenario I am considering a CE in a gap up situation. Now what if market opens gap down somewhere over here? So we know that the price has not been able to break below this area. What is this area? You can see every time the bulls tried to break below this area, they failed. They are not able to, sorry, the bears tried to break below this area, they failed. They tried to close below this, but they are not getting success into it. So I'll be waiting that till the time market does not closes below 17,600 or below this white area. You can mark it on the chart. Market does not closes below this white area, I won't be sitting into a put, because in the recent past also this area has been working as a support. So we have a small range over here. Let me repeat whatever I have said. If market opens flat and goes above this area, that is 17,730, I'll be sitting into a CE for this target. If market opens flat and forms a rejection over here, some bearish patterns over here, I'll be sitting into a PE. First target will be this white area. If market opens gap up below this level and gets rejection from over here, I'll keep a stop loss above 17,800 and like to sit into a PE. If market opens gap up above 17,800 and stays above this, I will be willing to take a CE in only that situation of gap up. If market opens gap up and straight away goes below 17,800, I'll be taking a PE, keeping the stop loss above 17,800, maybe 17,820 only in this case. If market opens gap down, I will not be immediately sitting into any position and not also PE till the time market does not closes below this white area. As soon as the market will close below this white area, I'll be looking for a PE. So right now, being the trend is very much bullish, I'm not saying the market will turn bearish, but we are anticipating a correction, and that correction come very soon. So we are limiting our positions in calls. In put side, we can try additional calls, or you can say 2 calls, 3 calls you can try, or sorry, 2 or 3 lots you can try. But in call side, I am not taking more than 1 lot, but in put side I can try more than 1 lot. So this is my overall view on Nifty. I hope you have understood that what market is exactly doing and what it can do. One important learning, guys, always remember, whenever a market moves up like this, it always comes down like this till the time it does not reaches a key level. Let me explain you on the chart. This is very important. You need to understand. Whenever a market moves somewhat like this, it always comes down like this till the time it does not reaches a key level. You can see a key level over here, or it does not create a key level of its own. Key levels behave like magnets and they attract price towards them. Either price will reach the key level or price will create a key level of its own. A key level is an important level wherein market is rejecting or market is reacting, right? So this is all for the Nifty analysis for the coming week and for Tuesday. I hope you guys like this video. The video was a bit longer, but I am sure it's worth it. I'll see you guys in the next video. Till the time, take